Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargon so you don't have to. This time we're looking at Ellington Financial's latest report, and let's just say they might be having a better summer than some of us, with some key numbers coming out for the middle of 2025. Before we dive in, if you like these insights, make sure to subscribe and join our Discord community linked below. So what we have here is a current report, basically an update on what's going on with Ellington Financial. The main event here is an announcement they made on August 27th of 2025. This report is all about Ellington Financial Inc. and the big news is about their estimated book value per share of common stock as of July 31st, 2025. Think of book value as kind of a snapshot of what the company is worth on paper, its assets minus its liabilities. For common stock, this is a really important number for investors to see how their stake in the company is valued. Now, the report lists their common stock first. This is what the average person usually buys and sells on the stock market. Then we see their preferred stock, specifically the Series A. Preferred stock is a bit different, often paying a fixed dividend and usually ranking higher than common stock if the company runs into trouble. They also have Series B preferred stock and Series C preferred stock. And finally, Series D preferred stock. It's interesting to see they have different classes of preferred stock, which suggests they've raised capital in different ways, over time perhaps with different features and terms for each. For their Series D preferred stock, the yield is 7.00%. This means for every $100 of preferred stock, investors are getting $7 back in dividends annually. This is a pretty steady income stream, which is attractive to certain types of investors. All these different classes of stock, common and preferred, are traded on the New York Stock Exchange. That's a pretty prestigious place to be, giving their stock good visibility. The core of this finding falls under other events. They are essentially informing the public about their estimated book value per share of common stock as of July 31st, 2025. The actual detailed information is in an attached press release dated August 27th, 2025. This press release is what's providing us with the good stuff about that estimated book value. And here at the end, we see the official sign-off signed by J.R. Herlihy, who is the Chief Financial Officer. This confirms the company is officially putting this information out there. Now, let's talk about what that book value actually means. For a company like Ellington Financial, which is in the business of investing and managing financial assets, book value per share is super important. It gives a sense of the underlying value of the company's holdings. When this number moves, especially when it moves significantly, it can tell us a lot about how well the company is doing in managing its investments. We're not seeing the full financial statements here, but this specific announcement is giving us a peek into the company's performance around mid-2005, how they manage their portfolio, what investments they're making, and how the broader economic conditions are affecting those investments all play a role in that book value. For example, if interest rates are changing or if the market value of the assets they hold goes up or down, that directly impacts their book value. For Ellington Financial, understanding their book value is like checking the health of their core business. It's not about the day-to-day stock price fluctuations, but about the fundamental worth of what they own. A rising book value generally suggests they are creating value through their investment strategies. A falling one, on the other hand, could signal challenges in their investment portfolio or adverse market conditions impacting their assets. Looking at the structure of this report, it's a straightforward notification and furnishing of a press release. They're not claiming new financial results are being officially filed in the sense of a full quarterly report, but they are making this information public because it's relevant. The mention of Regulation FD is key here. It's about fair disclosure, making sure all investors get the same important information at the same time. In essence, this filing is a heads up to investors about the company's estimated net worth per share of common stock as of the end of July 2025. Without the actual press release contents, we're looking at the announcement of an announcement. However, information about book value is often a leading indicator of how a company is performing, especially in financial sectors. For Ellington Financial, this reported book value per share is a crucial metric that seasoned investors will be scrutinizing closely to gauge the effectiveness of their investment strategies and the overall financial health of the enterprise. It reflects the accumulated value of their assets and liabilities, providing a baseline for valuation that transcends short-term market sentiment. Now, for my take on this, Ellington Financial, with its various classes of preferred stock and its common stock all listed on the NYSE, operates in a complex financial environment. The announcement of book value per share, especially as a key piece of information being shared, tells me that management wants to highlight the underlying strength or perhaps the changes in the company's asset base. The fact that they're providing this update in the middle of the year rather than waiting for a full quarterly report suggests they believe it's a timely and important data point for investors to consider for mid-2024. What I'd be looking for in that press release if I were an investor are the trends. Is this book value per share higher or lower than it was at the end of the previous quarter or year? What specific assets or liabilities contribute to any changes? Are there any significant shifts in their investment portfolio that are driving these numbers? For instance, if they hold a lot of mortgage-backed securities, changes in interest rates and housing markets would heavily influence their book value. If they're in other types of credit investments, then economic growth and credit quality become paramount. The risks for a company like Ellington Financial often revolve around interest rate sensitivity and the performance of the assets they invest in. If they've borrowed money to invest and the cost of that borrowing increases, or if the value of their investments falls, their book value can take a hit. Conversely, favorable market conditions and smart investment choices can boost that book value. In conclusion, this report is a simple but significant update on Ellington Financial's estimated worth. It's a signal to the market about their performance through July 2025, while we need to see the details in the press release to draw firm conclusions about their financial direction. The focus on book value per share indicates that management is keen to communicate the intrinsic value of their business to shareholders. Alright, that's our quick decode of this Ellington Financial filing. What's your take on the importance of book value for companies like this? Let me know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next decode.